all present here. On behalf of Muscat Chapter of ICAI, I extend a warm welcome to each one of you to this CP event on the very relevant topic, why invest in India? India today stands as one of the fastest growing major economies in the world, offering a unique combination of economic stability, a young workforce, strong reforms, and a rapidly expanding market. In this session, we will explore what makes India such an attractive investment destination at this point in time, from policy changes and digital transformation to sectoral growth opportunities. So, let's dive in and understand why now is the right time to look at India as a land of opportunity. We are privileged to have among us distinguished speakers and esteemed members of ICAI fraternity. I am CA Alina, your MC for this evening, and I am delighted to take you through the flow of events today. Now, let's begin with the proceedings with ICAI motto song. I kindly request everyone to stand for the ICAI motto song. Now, I have the honor of inviting our ICAI Chairman, CA Unmesh Bomi, to deliver the welcome speech.
भूल गए सब लोग या रुके? Welcome everybody to this wonderful and a very interesting topic we are having today. We have got fantastic speakers. We'll cover it in the rest of the session. But before that, I would like to just give you a glimpse of what was done in last week. We had our flagship event called Vista on 1st of November. That Vista themes its vision, innovation, startup, technology, and artificial intelligence. So we are going to take a very large delegation from Oman. So those who have not registered this early bird discount, please register. And we'll be taking the large delegation to WOFA. So we'll be arranging for group discount in terms of the ticketing part of it. So do connect with any of the MC members for WOFA. So these are upcoming events. We are going to have a family day on this Friday. How many of you have registered for the family day? Very few. Those who want to register, please connect with any of the MC members so we can make the necessary arrangements, okay? And then on 3rd December, CA Amarjit Chopra, our past president, will be here on this topic, regulation of the accounting and audit profession, and we're going to have WOFA in Jan. Other events will be informed in due course to everybody. So coming back to the topic for today, investment. So I was going to start with information to you, Sir Aashish ji, that I am the wrong person to talk about investments over here because I have lost more money than I have made, though I call myself a chartered accountant. And probably it makes sense for me to have more of such events. And when I was going through a couple of your videos, I came across some of those quotes. I think the first one is really applicable to me. I hope you said it, right? ChatGPT told me that you said it. So you better take ownership of what you said. So the markets treat you how you treat it. So probably I didn't take them seriously. So the markets also did not take me seriously. And probably we are going through the second statement. Corrections are a feature, not a fault. How many of you have suffered because of the recent correction? Please raise your hand. Everybody has made money in last 1 year. I think let's conclude the session. We don't need it. And obviously invest according to your ambition and income. Obviously Aashish will cover the team. Amit and Phanindra will also cover the various aspects in their address to you. So that was supposed to be a kind of surprise, but the surprise is open now. Fata poster, Nikla hero. I have 20 and I shortlisted 5 or 6 out of those. So the credit goes to me. So maybe you can. Okay, so I'll not take much of your time. So we've got Aashish, a fantastic person who speaks and talks with conviction and clarity, and I think he's one of those pioneer members who got discipline into the investing. And we would want Aashishji to guide our members to become disciplined. I hope they are all, because they all have made money in last 1 year. So you need to be careful on what you advise to them. And we also got to have Amitji and Phanindra, who are going to also share their experiences during the course of the day. There is one Sanskrit saying, see, my speech is not over without, so dhanam tu sanchaytam kuryat kala heto prayojane. I request the speakers for today to guide our members to accumulate more wealth and let the journey begin, let it continue, and everybody becomes, what, millionaires, billionaires? What do you want to become? Come on, think big. Trillionaires, yeah. Okay, with this, I hand it over to the MC. But before that, we have a standard ritual which we complete at the end of my speech. We all say, East or West, Indian Chartered Accountants are? Yes. Thank you.
Thank you, Chairman, for your inspiring words. Now it's time to commence our technical sessions. First, our distinguished speaker, CA Amit Desai, is a respected professional and thought leader known for his insights on investment strategies and financial growth. Let's have the AV, please. May I request CA Badri Narayan to kindly escort CA Amit Desai to the stage.
Good evening, everyone. I think I am the local man here to do the prelude, okay, being a part of ICAI Muscat Chapter, as well as the fraternity. I am also part of Upscale Investments Private Limited. So when I was entering the hall, one of the members asked that, you are here in Middle East, and what is the background, how Upscale Investments Private Limited was born? So I have been married last 40 years. And only one complaint my wife, she has. You want to know? I minted millions for the banks or the institution I have worked, but when it came to my own finances, what happened? I literally messed it up. What is the reason? I think let's make this session little interactive. And in last July, August, Gaurav invited me as a speaker. I made it interactive. So some members were asking that, are we going to get the gift if we answer correctly? The answer is yes. So can you guess, being a qualified chartered accountant, working in a bank at a senior level, why I was not able to justify my own investment? Yes, Badriji.
Too cautious about seeing the actual fact about the company or investment where you would like to be. We are over cautious.
Absolutely. So I struggled for a couple of months, to give proper answer to my wife. And I said that when it's the bank's money, my own emotion does not get involved. But when it is my own money, I have this issue. So that is what we all face, and that's why upscale financial investment took a birth. Myself, CHP Kumar, Amit Shah, who's sitting here, we came with an idea, and I have been in the region now 40 years. I have been taken for a ride by the big banks, ICAI, HDFC. In our Bombay language, they say, chuna laga diya. They sold me more than 6 ULIP policies. How many of you have invested in ULIP? Couple of them, yeah. So during COVID, when I got some time, I started analyzing my portfolio, and I said, I'm not getting more than 6 or 7% return. And normally, what all the NRIs here in the Gulf we do, if we don't have time, where we park our money? In FCNR, saying that every year dollar is appreciating 5%, I'm gaining, but that is an illusion. Anyway, so this is a prelude. I will just start my presentation. Which is this picture? I mean, you all guys staying in Oman for a long time. Okay, I am going to give some prizes, okay? Now, as a chartered accountant, internal auditor, you will ask what is the price, then only we will spend our energy. So this is something which will help you in your wealth creation. So I expect good response. Okay, can you guess what is this? Dollars, up and down. Samit, you had some investing in dollars. What else? Fantastic. What's your good name, sir? Manish, fantastic answer. Prize I will declare, yeah. Itna easy question pe I am not going to give you prize. So do we all work for money? But what we have to do? Make money works for us. We have seen so many of our clients, 40% of our clients are chartered accountant. What they do, they park their funds in FCNR, NRE account and forget about it. But most of the guys work here 10 hours, 12 hours, and money is lying idle in the bank account. So what are we aiming in life? Financial freedom. Mukesh Bhai has given the right answer, yeah? What we all need is financial freedom. Why we aim for the financial freedom? Correct. What else? Absolutely. Another thing, Badriji says, we are not dependent on our children. Very good. So this is the reason why we need the financial freedom. To break free, live evidently, and control your destiny. Otherwise, there are so many cases, people who have worked 20 years, 25 years in Middle East, gone back, there is no proper financial or retirement planning, and then what will happen? They have to lower their standard of living. Now, this is my favorite quote. If you don't find a way to make money while you sleep, you will work until you die. We all know this gentleman. How old is he now? 95, retired. Just 24 hours back, he retired. And what was his portfolio? Yeah, billions of dollars. Okay, now I am going to give a gift here for the correct answer. I need someone who will give a correct answer. Somebody has to monitor. Otherwise, we all are chartered accountants. We are very truthful, as per the data given to me. True and fair. HSBC has done some survey just 2 years back in GCC countries. How many of the non-resident Indians not having a proper financial and retirement planning? Give me answers in percentage. 80%, wow. I think we have to open upscale office here then. Okay, let me show you what I have. Something for the wealth creation. Come on, take a guess. There is no negative marking. 65. I am looking exact. 95, no. 70%, no. 75%, no. 54, no. I am looking. Not 100%. Less than that, not 98%. 65 is very close. 65, give me the correct answer. 69, no. 63, very close. 62, who said 62? Only one person, yeah, be truthful. Come on, sir. You said 62, right? Please. What's your good name? Thank you. So this is really staggering, 62% of the people who have been surveyed by HSBC, they don't have a proper financial and retirement planning. What is the reason? Huh? There is no proper guidance given to them. Normally we rely on the banks. I was relying for more than 25, 30 years. But the bank will sell you those products where they get maximum commission. And every third or fourth year, my RM was getting promoted and then he go and change. So then I realized that, all my money, what he has been coming over, inviting me for dinner, giving me advices, it was for his benefit and not for my benefit. Okay, there will be a prize here. How much money Indians sent home last year? That is in US dollar. 62 billion. 125 billion. Any guess? Come on. 100 billion. Okay. Aashish, you will not qualify for the gift, huh? 140. Yes, sir. Huh? I think somebody is Googling, huh? Chat GPT, you ask, but sometimes Chat GPT will go wrong. 130 billion. So who has given the correct answer, please? Nobody? Come. Give a big round of applause to Samir. Okay, just quickly touch base on the retirement planning because CHP is going to take a full session on the retirement planning. But most of us have done the AI course. Thanks to Aashish ji who encouraged me to enroll the last AI course. How many of us we have gone through that AI course which happened? So many. Under the AI paradox, have you given a thought on this, that this will disrupt your retirement planning? What's the impact of your retirement in AI era? Sorry? Early retirement, very good. So let's go and see what are the impact. So this is a reality check that our timeline, career timeline is definitely going to get shorter. There is a startling calculation tool that makes you pause. Anybody has seen that article called the 80,000 hours blind spot? How many of you? 80,000 hours of blind spot. This is a fantastic article. Go and Google. You will get a lot of information. And who has written? This has appeared in the Growth X newsletter by Udyan Valvekar. He is based out of Bangalore. Probably Aashish ji must be knowing him. He has calculated a tool where you enter your current age, it will show us that how many working hours are left for you to make your retirement plan and how many working hours will be eaten up by AI. So when I tried mine, obviously now I am on the other side, so it does not make an impact. But if I put my age there as 35 or 40, it was really mind-blowing. So there is a link, now obviously because of the lack of time, but I have taken a QR code. Probably I will leave this paper here at the desk. This QR code, if you scan and enter your age, then tell me what the result you are getting. How many working hours AI likely to eliminate from your career? Yeah, almost 50%. So AI compression effect, how many years? 40 years of your career becoming 25 years. So what have happened? Our lifespan is getting extended, but the working career get compressed. So what we have to do? We have to be more prudent, we have to be more wise when we do our retirement planning. So this is a new mantra, this is a fact that your career time life is shrinking. So this is a QR code, obviously for the sake of time, otherwise everybody will take out their iPhone and scan it. Badri has already written. It is not going to impact you, Badri. Okay, so before I conclude my slide, what is the success mantra? Managing money is more important than making money. But what mistake we all do? We just concentrate on making the money. So at Upscale, we are here to guide you. The Upscale team will be here till 24th of November. They are placed in City Season Hotel if you want to meet them, if you want to consult them. So thank you very much. And I will not take much time before inviting Aashish Somaiyaa ji on the dais. Thank you very much. Thank you.
Thank you, CA Amit ji, for that powerful and enlightening session. Your message, don't work for money and make money work for you, and your thoughts on financial freedom have truly inspired us to think smarter about our future. Thank you so much. Next, we invite Mr. Aashish Somaiyaa, who is a prominent figure in the investment industry, renowned for his expertise and leadership in financial market. Can we have the AV, please?
Meet Mr. Aashish Somaiyaa, an accomplished equity partner and CEO at White Oak Capital Asset Management. He leads domestic operations at White Oak Capital Group, managing nearly 35,000 crore rupees in equity funds. Mr. Aashish brings over 25 years of experience in asset management, having spearheaded Motilal Oswal Asset Management's growth from 1,300 crores to 42,000 crores under his leadership. He introduced Indian investors to global passive investment options like Nasdaq 100 and S&P 500 indices. His leadership has earned Motilal Oswal the Brand of the Year award at CNBC India Business Leadership Awards in 2018. Mr. Aashish is recognized as the most distinguished alumni of the year 2018 by NMIMS Mumbai, reflecting his valuable contributions to the finance industry globally. Please join us in welcoming Mr. Aashish Somaiyaa.
May I request CA Aashish Subedar to kindly escort the speaker to the stage.
Hi, good evening, everyone. So warm welcome to all of you. And I'd like to thank Mr. Amit Desai for inviting me here. And also many thanks to the Oman chapter of ICAI for organizing this and giving me the opportunity to come here and speak to all of you. It's quite an honor to have so many people attend this event. What I'll do is that I have like a 60 slides presentation, but I've been told that I have to speak how many minutes? 30, 40, 45 minutes. So, yeah, I mean, I sent the presentation because I was told you send the presentation, but I don't necessarily use the whole presentation. And I'll try to keep it as relevant for you as possible. I was noticing when Unmesh ji was asking, that you asked कि पिछले साल का correction में किसका पैसा कम हुआ, something like that you asked. हाँ तो वो एक्चुअली आपको सरप्राइज नहीं होना चाहिए बिकॉज हमारे यहाँ पे इन इंडिया बैक होम सेबी डज दिस सर्वे एंड यू मस्ट हैव सीन अ वेरी पॉपुलर सर्वे विच केम 1 year बैक द रेगुलेटर देमसेल्व्स सेड दैट 91% ऑफ द ट्रेडर्स दे लूज मनी. हैव यू रेड दिस? उससे ट्रेडिंग कम हुआ क्या? क्योंकि 100% लोगों को मालूम है, 100% लोगों को ऐसा विश्वास है कि वो बाकी का 9% में है. So, and for that you don't need to do a survey, by the way. For that you don't need to do a survey. I will prove it right now. अब इसमें क्या है, थोड़ा रिफ्लेक्सिविटी. अगर मैं सवाल पूछ रहा हूं तो सब लोग सचेत हो जाएंगे एकदम, लेकिन फिर भी मैं सवाल पूछता हूं कि ये सब सर्वे करने का जरूरी नहीं है. If I ask you in this room, how many of you believe that you are above average driver? Genuinely, दिल से हाथ करके हाथ ऊपर करना. How many of you believe that you are above average driver? आधे से ज्यादा लोग हाथ ऊपर कर देंगे. कितने लोग above average हो सकते बताओ मेरे को? In a room, how many can be above average? But more than half will raise the hand. What does it mean? Right? So there is no surprise that if 100% people think that they are in the other 9%, that is how the market actually works. Correct? Till the time all human beings think that they are above average, market will keep functioning. Right? The day 100% of the human beings become humble, then we don't need a market to prove anything. Right? So, I don't know. I mean, I don't know if you have come across this or not. There is a statement which I read. I don't know who wrote it. I hope that sometime ChatGPT says I only said it. But all those other statements are actually true. And I'm grateful to you because I have never seen such a compilation. So send that slide to me later. और उसमें फोटो बहुत पुराना है, उतना मोटा मैं हूँ नहीं एक्चुअली. तो स्लाइड निकाल के भेजना मेरे को. So there is a statement which I read which says that the stock market is the longest running live experiment to study human behavior. Did you know this or not? It's factual. Statement किसने बोला मेरे को actually नहीं पता, but factually true that the stock market is the longest running live experiment to study human behavior. You know why it is said, and there is proof of this, that if you actually see everything we talk about stock markets, see, stock market is all about gauging the potential market capitalization of any business, right? And gauging market capitalization of any business requires people to estimate all the future cash flows and then present value all those future cash flows, correct? So obviously all those future cash flows and estimation of market capitalization is linked to profitability, right? It is linked to corporate profit, correct? So stock market is nothing but directly linked to corporate profits. And corporate profits come by participating in the economy, right? Because companies are obviously, producing something, providing some services. So essentially, stock market is a subject or a branch of economics, clearly, right? But did you know that in last 20 years, the Nobel Prize in Economics has been given to people who study human psychology? Did you know this or not? You must have come across, definitely, Daniel Kahneman, he got Nobel Prize in Economics. But he was not the kind of economist who taught you about interest rate, exchange rate, currency, and supply and demand. Right? He got Nobel Prize in economics, but he was studying human psychology. Then Richard Thaler, he wrote a famous book called. So Daniel Kahneman is obviously got the Nobel Prize, but he wrote the book Thinking Fast and Slow. right? Or Thinking Fast, Thinking Slow, something like that the title is. And Richard Thaler wrote this book called Nudge. Even he got Nobel Prize in economics, but he also was actually a student of human psychology. Now, इसमें ऐसा कुछ आपको लगेगा कि ठीक है बार बार क्यों रिपीट कर रहा है इतना रिमार्केबल क्या है बट इट इज एक्चुअली वेरी रिमार्केबल द रीजन इज बिकॉज इफ यू स्टडीड एनीथिंग इन इकोनॉमिक्स वट एवर इकोनॉमिक्स यू एंड मी हैव बीन एवर टॉट और आपको ज़्यादा इकोनॉमिक्स पता है मैं तो केमिकल इंजीनियर है तो मेरे को ज़्यादा बोलना नहीं चाहिए बट any economics that you have been taught, you must have been taught that the founding assumption for economics is that human beings are rational and logical. Right? जैसे मैंने accountancy नहीं पढ़ा but accountancy में founding assumption क्या है कि it's a going concern. Right? If it is not a going concern तो ये सब करके उसका फायदा नहीं है. So same way, the way in accounts you're assuming it's a going concern, same way in economics, you always start with the assumption that human beings are rational and logical. मीनिंग मनुष्य हमेशा वही करेगा जो उसके फायदे में है जो उसके लिए आसान है जो उसके लिए सबसे ऑप्टिमल चीज़ जो है सो इकोनॉमिक्स अज्यूम्स दैट ह्यूमन बीइंग्स आर रैशनल एंड लॉजिकल राइट ऐसा इकोनॉमिक्स का नोबेल प्राइज किसको दिया जो ह्यूमन साइकोलॉजी स्टडी करता है अगर ह्यूमन बीइंग्स रैशनल एंड लॉजिकल है तो साइकोलॉजी स्टडी करने का क्या लॉजिक है क्या जरूरत है यू अंडरस्टूड बिकॉज साइकोलॉजी इज स्टडीइंग ह्यूमन behavior under different conditions. So in economics, if you assume that human beings are rational and logical, तो psychology study करने की क्या जरूरत है? In fact, it is flying in the face of the basic assumption itself, right? So 60-70 years पहले उसका भी नोबेल प्राइज मिला था ये assume करके हमको इकोनॉमिक्स सिखाने के लिए कि human beings are rational and logical. पिछले 20 साल में नोबेल प्राइज मिला ये बोलने वाले कि पहले वाला गलत था, right? How do you get this? Because you have been taught that when the price of something goes down, the demand will go up. And when the price goes up, demand will go down. This is the reason why you say that this assumption makes you believe that human beings are rational and logical, right? That is the main assumption, right? But does it really happen? Yeah? I mean, when the price goes down, demand goes up, ऐसा होता है? Stock market में नहीं होता है ना? Real estate में होता है? दुबई के रियल एस्टेट में तो ऐसा नहीं होता है राइट जितना प्राइस ऊपर जाता है उतना डिमांड ऊपर जाता है करेक्ट इज इट हैपनिंग नेसेसरीली फॉर थिंग्स लाइक गोल्ड एंड ज्वेलरी दैट प्राइस गोज अप सो डिमांड विल गो डाउन नॉट हैपनिंग स्टॉक मार्केट डेफिनेटली डजंट हैपन दैट व्हेन द प्राइस गोज अप डिमांड विल गो डाउन उल्टा होता है करेक्ट So what is the reason? The reason is basically that in the last few years, last say 30-40 years, there is a clear realization that human beings are not rational and logical. They are emotional and psychological. And if human beings were rational and logical, तो stock market नाम का कोई चीज होता ही नहीं क्योंकि सब लोग प्रॉपर गणित के साथ कंपनी का मार्केट कैप एस्टिमेट करते सबके अजम्पशन में 19-20 का फर्क होता तो किसी कंपनी का कभी 20 का पीई मल्टीपल कभी 60 का पीई मल्टीपल एक साल के अंदर अंदर कैसे हो सकता है राइट अगर सब लोग गणित कर रहे हैं तो सेम कंपनी का जितना उसका ईपीएस का फोरकास्ट चेंज नहीं होता है उससे कई गुना ज्यादा उसका शेयर का वैल्यूएशन चेंज हो रहा है राइट सो द पॉइंट इज दैट नाउ व्हेन आई मेक अ प्रेजेंटेशन यू विल सी लॉट्स ऑफ ग्राफ्स एंड चार्ट्स इफ यू ओपन बिजनेस टीवी राइट समटाइम वी कम ऑन बिजनेस टीवी आवर फेस इज दिस मच surrounded by all types of graphs and charts and numbers which are flashing, correct? And the most genius people, IIT, IIMs, rank holder, chartered accountants, they all are there and telling you why something is happening, right? अगर आप ध्यान से सुनेंगे आपको लगेगा ये बात करके मेहरबानी कर रहा है यहाँ पे नहीं होता तो रॉकेट ही उड़ा रहा होता है एक्चुअली तो right? It is made to believe. So you take my first 5 minutes as a disclaimer. Why? Because you are made to believe. And rest of my presentation also might make you believe that stock market is all about maths, science and finance. ऐसा belief है ना? It's all about maths, science and finance. But the reality is that जितना maths, science और finance जितना जताया जाता है ना, उतना है नहीं actually. उससे कई ज़्यादा psychology और emotions और behavior है. That is the reason why the Nobel Prize is also given to people who study psychology because in the last 30-40 years there is this clear realization that as much as the math and the science is important, the behavior of people and how they conduct themselves is equal or more important. The math and the science plays out over a period of 10-15 years. Right? मगर आप 32 years का इंडिया का हिस्ट्री देखेंगे ना, it is perfect mathematics. 12 to 13% compounded is the nominal GDP. Some 12 to 14% compounded is the EPS of Sensex and Nifty companies. और वाकई में 14% compounded market का return है. So in the long run, all the mathematics actually reconciles. But in the short term, there is no mathematics. In the short term, it is only psychology and behavior. Psychology, behavior, emotion, right? So my request to you is that when you approach this subject, don't try to triangulate the maths to a perfect, because don't try to get the math perfect. Because most of us are preoccupied with getting the mathematics. मतलब हमको सब दोनों left side, right side tally होना चाहिए, balance होना चाहिए, reconcile होना चाहिए, सब चीज एकदम टिक होना चाहिए. आप पूरा टिक करके सब मैच कर देंगे, लेकिन पैसा नहीं बनेगा. Why? Because it's not so much about understanding the math or getting the math right. It's more about getting the behavior and the psychology right. See, like, sir showed the picture of Mr. Buffett, right? Mr. Buffett, obviously, he's truly unique because the richest people in the world are actually businessmen. He's the first guy who proved that to be richest person in the world, you can invest in other people's business and become rich. And in the last letter, you said, what is the most striking thing he has written in the last letter? He finally said, कि भाई मैं तो investor है, मैंने बर्कशायर के लिए जितना पैसा नहीं बनाया उससे ज़्यादा तो टिम कुक ने बना के दिया है. So see, he is richer than Tim Cook, by the way, but only by owning the stock of Apple, correct? So the most famous investor in the world, what is his most famous statement? What is his most famous statement? Is his most famous statement कि भाई ऐसा कंपनी खरीदो जिसका कैश फ्लो इतना होना चाहिए, जिसका कैश फ्लो कन्वर्जन ऐसा होना चाहिए, जिसका ROIC वैसा होना चाहिए? Is that his most famous statement? His most famous statement is be greedy when others are fearful, be fearful when others are greedy. So now I have a question to you. When somebody says be greedy when others are fearful and be fearful when others are greedy, इसमें सबसे important word कौन सा है? Sorry? Be greedy when others are fearful, be fearful when others are greedy. Which is the most important word in that statement? Fearful. Be. The most important word is others. Because the defining word is others. Because it's be greedy when others are fearful. Be fearful when others are greedy. अभी उससे ज़्यादा difficult question है. Others कौन है? Who is the others? हाँ, हम लोग ही है. जो आपको आईने में दिखता है वही others है. और अभी जो others है ना, अभी आपका बात नहीं कर रहा हूँ, मैं others का बात कर रहा हूँ. The others are very funny people. I'll tell you why. See, in March 2020, आपने देखा होगा, see, in recent memory, there are very experienced people here, but in recent memory, the most crazy situation was in March 2020. मतलब I have been around for 26 years. I have seen internet crash, I have seen Lehman Brothers, I have seen 2013, but I also happen to be in the market in 2020. We have seen all types of ups and downs, but let me be honest, 3 हफ्ते में 38% गिरते मैंने भी नहीं देखा है. Okay, before that we never saw that. That 3 to 4 weeks it is down about 38% तो इंडेक्स गिरा. बहुत सारा कंपनी का शेयर का दाम ही 70% डाउन हो गया, right? So what happens is when these kind of crazy things happen, everybody is, apart from worrying about things, people watch TV a lot and they scroll social media a lot. तो 40% डाउन हो गया तो obviously TV में क्या आएगा, किसी को पूछ रहा है कि भाई what do you think, what is happening? अभी 40% डाउन होने के बाद वो क्या बोलेगा? वो बोलेगा आपको मालूम है in 1918 there was Spanish flu, 500,000 people died. In 1992 there was plague in Surat, so many people didn't make it. In 2003 there was SARS virus in Hong Kong, so many people didn't make it. वैक्सीन आने को तो 10 साल लगता है. Banks will go under. We all will be sitting in the home and lot of businesses will get shut. So वो आपको explain करेगा ना 40% डाउन क्यों है, वही तो explain करेगा. Right? So then what happens is you got explanation कि भाई चलो 40%, why my money is down 40%, you got explanation for that. So you feel हाँ ठीक है, सबके साथ हो रहा है, ठीक है, बोल रहा है, समझा. But after 6 months, market is making new high. एंड ये तो मार्च 2020 में सब समझा रहे हैं कि 8,700 निफ्टी क्यों हो गया, बिकॉज 12,500 became 8,700. So you got explanation why it happened, right? In exactly 18 months, March 2020, October 21, in 18 months Nifty became 18,500, मतलब 18 महीने में 2.25 times. So of course you are obviously watching TV, so बोलेगा क्या हो गया, बोला हम लोग अमृत का लाने वाला है. लेगा अजीब लोग है तुम लोग यार, अदर्स का बात कर रहे हैं, आपका बात नहीं कर रहे. So what happened? So see, what is happening is that it's almost schizophrenic, right? Boss, at one time you were really believing that the world will come to an end, and now you are believing all trees will grow to the sky. इतना तो EPS का प्रोजेक्शन नहीं चेंज होता है, उतना इंडिया का GDP ग्रोथ भी चेंज नहीं होता है. क्या चेंज क्या होता है? खाली लोगों का मूड चेंज होता है और कुछ चेंज नहीं होता है. Only people's perception, that is the only thing which change. Nothing else actually changes so much. Correct? So that's why it's very, very important to remember that it's the psychology which will matter. Perfect mathematics, beyond a point, perfect mathematics doesn't really matter. It's the psychology which will actually matter, and that is what you should be really, really focused on. And मैं कितना भी बोलूँ ना, managing psychology is extremely difficult. So now let me give you an example. See, I'll come to the graphs because my job is difficult. If I speak for 1 hour and if you don't see any graph and chart, आपको लगेगा इसको कुछ नहीं आता है. लेकिन I can assure you कि जो आदमी आके आपको खाली ग्राफ और चार्ट बताएगा ना, उसको भी कुछ नहीं आता है. So hear me out. So hear me out. See, why I said psychology, and it's very difficult. मैं आपको कितना भी बार anybody can give you as many bhasha and you will not be able to control your psychology. Let me give you an example of this. Have you all been on a roller coaster? You've been on a roller coaster, right? ये greed fear wala. So you've been on a roller coaster, right? Now tell me something, when the roller coaster is going up, up and up, when it is nearing the highest point, right? Like I'm an engineer, I can't help noticing when the roller coaster is going up, now at some point it stops. Then you can hear the gear click and then it again goes up, okay? When the roller coaster is nearing its highest point, what is your emotion? How do you feel? हाईएस्ट पॉइंट पे, मतलब ऐसा ऊपर जा रहा है, कैसा लगता है? अभी मैंने सवाल पूछा तो आप लोग सेकंड गेस करोगे, लेकिन हकीकत बताओ. You feel fearful at the highest point? If you are in Hong Kong Disney, you will see the whole darya, right? You will feel beautiful, na? You will tell your partner or your wife or husband who you come with, you will tell your partner or husband or wife, ना कि बढ़िया है यार, साल में एक बार आना चाहिए इधर. आपके वजह से, it's because of you that I came here. Left to me, I would not have never planned this. My wife is here actually, yeah? She's listening. So you would say na ke, wow, because of you I have come here. It's so beautiful. Look, the wind is blowing, you feel good, right? At the peak. But you guessed it right, that at the peak, that is your emotion. उसके बाद क्या होता है? When you feel nice, when you feel happy, हवा चल रहा है, उतर के फिर वो राइड में जाएंगे, नहीं इसी राइड में वापस आएंगे, right? वहाँ पे जाके खाना खाएंगे. You look around, right? Like I said, Hong Kong Disney, you can actually see beautiful entire ocean you can see. So when you are feeling most happy about being there, you are right. उसके बाद क्या होता है? उसके बाद जब नीचे जा रहे हैं तभी आपको कैसा लगता है? What do you feel when it is hurtling down? It's hurtling down. Now बोलो, खुशी होता है क्या? When it is hurtling down, what's your emotion? वो जिसको थैंक यू बोल रहे थे उसी को आप बोलेंगे, तुम्हारी वजह से आया मैं इधर, मेरे को कोई शौक नहीं है रोलर कोस्टर में जाने का, अपन ही पैसा दे रहे, अपना पानी पानी हो रहा है, अगले बार लाना मत मेरे को इधर. दिस नॉट माई आइडिया ऑफ वेकेशन, राइट? सो व्हाट विल बी योर इमोशन? यू विल थिंक ए भगवान ये रुके और मैं निकलूं यहां से. सो द पॉइंट इन टाइम व्हेन यू फील अभी धरती फटेगी, ये अंदर जाएगा, उसके बाद क्या होता है? व्हाट हैपेंस व्हेन यू आर एट द हाइट ऑफ फियर? अरे बॉस ये रुके तो मैं अगली बार नहीं आएगा, मतलब आपको भगवान याद आ जाएगा. उसके बाद क्या होएगा? आफ्टर दैट इट एक्चुअली गोज अप. So it is very difficult to control your emotion. However much speech you will listen, the point is that at the peak you will be excited and at the bottom you will actually fear for your life. And I have not come here to speak about roller coasters. This is exactly what happens in the market. I'll give you a practical example of this. All of you must be in some way directly, indirectly following, India's market, and some of you must be investing in mutual funds, etc. So if you see, whatever you talk about psychology, do you know in September 2024, Nifty was at the highest point, 26,200. At the highest point, do you know which category of mutual funds got highest money? Take a wild guess. Small cap fund, sector fund, मतलब small cap fund, ये defense, railway, infrastructure, highest money. Okay. Do you know in September 2025 which type of mutual fund got highest money? Gold. Gold. Multi-asset also because it is gold, partly in gold. Highest money went into gold. In English, there is a proverb. Okay, don't do this. I don't know it's a proverb or no. Unmesh bhi aap samjho, maine hi bola hai. Ye bhi aap. It says that you have to shoot where the rabbit will be. Don't do this. There is a guy in Bandra who is in trouble because of this. It's just an example. You have to shoot where the rabbit will be. अब कितना भी psychology study कर लो, in the stock market, people are perpetually shooting where the rabbit was 2 years back. So two things. It is impossible to know where the rabbit will go. But the least you should do is not shoot where it was. Correct? So that is most important. And ye bhi, the reality is that people always chase the past winner. So 1 year back or 2 years back, everybody was happy to invest in equity. 1 year return is zero. Last 1 year return is zero. Now people are thinking, अरे पिछले साल पैसा बैंक में रहने देते अच्छा होता, गोल्ड खरीद लेते तो अच्छा होता. तो ऐसे ही ख्याल आते हैं, बाद में ही ख्याल आते हैं. Correct? So this is something which will never change. You think of all this conversation, first few minutes what I spoke, think of all this as disclaimer. You think that if you don't keep these things in mind, then rest of the mathematics is of actually no use. Okay? Now, few slides that I want to share with you right now. Also, one more thing I've seen that social media is making it very difficult for investors. It's making very difficult. Yesterday, some of our friends, they were kind enough to take me for dinner, and we were talking about the influence. I think someday somebody will do a PhD in how social media has impacted investors. Karne jaisa topic hai, right? Because it is causing people serious distraction, right? So if you follow all the, all the various platforms on social media, what you will find is that in last 4 to 5 years, there is lot of noise about market बहुत ऊपर चला गया है, बहुत सारे young लोग market में आ गए हैं, 20% गिरेगा तो सब भाग जाएंगे. You hear, the general perception is market has gone up a lot. And now I'm thankful because this is the right audience who can understand the mathematics. You will be surprised to know, or probably you may already know, in last 5 years, the earnings per share of Sensex companies has compounded 16.5%. तो ऐसा है कि पिछले 32 साल का हिस्ट्री तो 12-13% है. But in the last 5 years, वाकई में Sensex EPS has compounded 16.5%. And Sensex has also compounded 16%. In fact, you add back the dividends and take a total return index, it has compounded 17%. And this is not taken from bottom of COVID, before COVID and all. This is like to like comparison, right? October 2021, Nifty was, market had recovered already, correct? October 2021, Sensex and Nifty had already recovered. From that point also, it has compounded about 16-17%, but it is absolutely in line with the earnings of the companies. It has not done something crazy or outlandish. So what happens is that when people see big numbers, oh, अति हो गई, बहुत ज़्यादा हो गया, 16% कैसे आ गया? अरे बाबा, 16% compounded is with the EPS also. And by the way, the ROE has actually improved. So not only earnings has grown, the quality of earnings and the quality of business or efficiency of utilizing capital has actually improved. So market is doing what it is supposed to do only. So if somebody tells you, oh, it has gone up too much, it is too expensive, It's not borne out by facts. The second thing, if you see, what does this do? It compares the growth of the index with the growth of the EPS. Now somebody can say, you are just proving your point by taking two dates. October 21, 22, 23, 24, 25. आपने October ऐसा पांच साल, you are just taking few dates to suit your purpose. So no, we are not taking few dates to suit our purpose. You see, there are times whenever these blue line or red line is way above the zero line, the market has gone ahead of fundamentals. Whenever the red line or the yellow line is way below the zero line, market has gone below the fundamentals. See where we are now? It's fair. It has grown at a rate of the rate, because see, if the market doesn't deliver what the earnings has delivered, then it's a cause for concern. If the market runs much ahead of the earnings, market is expensive. But if it is growing, ultimately, see, kabhi market aage chalega, kabhi market piche chalega. Ultimately, if it converges, there's nothing wrong with it. At some point in time, you expect it to converge, right? Because how can a company or a market deliver more than the earnings of companies? You will compound your money at the rate which earnings are compounding. And because of psychology, sometimes market gets overly bullish, so prices go ahead of fundamentals. And sometimes it is bearish, so prices go behind the fundamentals. But right now where you are, it is fair. It is not as exaggerated as most people or many people might actually make you believe it, right? If you see even small cap, for example, there is this perception created that small cap companies have gone crazy. Next few slides will tell you, even in small cap, actually, the index compounding is in line with the earnings. It is not, and you can see this, that in last few years, the breadth of corporate performance in India has actually had a blowout improvement. If you take entire corporate universe, listed companies, you will find that more than half the companies have shown revenue growth of more than 10%. And half the companies have shown profit growth more than 10%, if you take the entire universe. And you can see that if you take large companies as in large cap, the share of total corporate profit of large companies is actually, see, for people who follow the stock market, at this point, 2018, 19 and 20, there was this phrase in the Indian stock market that only Ritik stocks are going up, which is HDFC, Reliance, ICAI, Tata Motors, Infosys and Kotak. There was a phrase that only these few companies are driving the market. Okay? That is this place, where large companies were accounting for 40, 50, 60% of total profit. Today, large companies are accounting for 30% of total profit. So no doubt, no wonder that the corporate performance has actually become broader, and hence small and mid caps have also done well. So this is just a context of last 5 years. My first point to you is that market is not as, sometimes, when people make more money than what they expected, they start thinking market has gone crazy. It's not that way. Market is doing what it is supposed to do. But what has happened is that last 1 year is literally zero, no movement in the market. Why is that? That is because if you see, come 2024, during COVID, the government opened the purses, right? There was a lot of money being spent, correct? At some point in time, government started to worry about fiscal deficit. And plus, in India, when there is election, for almost 5 to 6 months, government is out of action completely. There is obviously code of conduct, but there is campaigning, and obviously government spending will, new projects and spending and sanctions and all those things will actually start to taper off. Plus, the currency started depreciating. So in 2024, 3-4 things happened together. One is government is out of action because of election, then there is coalition, then there is July, the budget comes in July, then government comes into action, 6 months out. So, and plus the government was trying to curb the deficit, right? At the same time, RBI was defending the external macro environment. So the monetary policy and the liquidity was tight and interest rates were high. So as a result of that, earnings started to, like by the time we came to September 2024, while Nifty was at all-time high, GDP growth was 5.4%, corporate earning growth was 0. We had high interest rates, tight liquidity, and a government which was more or less out of action. That was 1 year back, right? And because of that, And parallelly, if you see in the Western world and in other parts of Asia, there's been this AI-related boom, and India is perceived to be not so AI kind of perception, right? So domestic conditions became worse, and external market started having this huge AI-related, and not just US, there is a big AI-related rally, of course, South Korea, Taiwan, like you can see data which shows that money has moved to South Korea and Taiwan and China and the other markets when domestic condition in India actually became difficult, right? Now, we have come to a situation which is quite surprising. In last 1 year, India has given negative return in dollar terms, and emerging markets other than India have given a 20-30% return in dollar terms. More than 30% return in dollar terms. So we are now standing at a point where India's underperformance versus emerging markets is its worst ever in last 30 years. 30 साल में ऐसा नहीं हुआ है that India is 27% behind other emerging markets. Never happened. So now you take the whole thing sum total. In 1 year, our GDP growth forecast has gone from 5.4 to 6.9. Our sovereign rating is upgraded. RBI's policy has changed. And you know, when RBI releases policy, people look at interest rate and liquidity. Actually, what has changed in RBI's policy is the credit policy which has changed. Previously, ECB was a bad word. Now they are liberalizing ECB. Previously, RBI would have very tough norms on capital provisioning against the lending which banks do, and also banks lending to NBFC. For many things, capital provisioning was very adverse. Like banks were told not to lend, for example, to, if you want to invest in the stock market, loan against securities limit was 20 lakhs. RBI is making it 1 crore. RBI is figuring out ways where people can lend against REIT and InvIT. RBI is figuring ways for people to lend for mergers and acquisitions. So for the first time in 10-15 years, RBI is actually liberalizing the credit policy, correct? And what is the government doing? The government has started to cut taxes, reduce the pace of consolidation of the fiscal deficit, cut taxes, rationalize GST. So RBI and government are opening purse strings. So now you put the whole picture of the last 1 year. In 1 year, our return is zero, it's negative in dollar terms. India has underperformed 27% versus emerging markets. Other markets have these huge AI-related, which pehle people were saying hype, now they are calling it bubble. If you put the whole picture together, what has happened in 1 year? Domestic conditions have improved, meaning they have had a 360-degree change. When 1 year return is zero, our domestic conditions have completely changed. We have given zero return, which is 27% behind emerging markets. And we have not had any AI-driven hype or bubble or whatever. So somewhere in the next 12 to 18 months, what you will likely see, two things can happen. If there is globally a rally, India will catch up. Because there's no reason for us to be 27% behind when the whole domestic environment has completely changed, right? So if there is a rally, there's no reason for us to underperform because we will be one of the cheapest. If there is a crash because of AI, like, for example, now there is increasing news. If you see US, their economy is AI and AI is the economy, right? I mean, almost the entire GDP growth is because of capex related to AI. And almost the entire S&P 500 performance is the 7 stocks which are supposed to be AI beneficiaries. So if there is any correction in the Western world because of that, then who will participate in that correction? The likes of South Korea, Taiwan, and China. We are not so AI perception, right? So we didn't participate. We are anyway underperforming. So if there is a fall in the market, we would fall less or not fall. If there is a rally, we would actually catch up. Because in rallies, obviously the undervalued part is what would actually catch up, correct? So net-net, we are in a position where the market has now become extremely attractive. It doesn't mean that it will start going up. My personal opinion is that first you will have a correction because of some hype and hoopla in the Western world. In that correction, we will outperform. So if you ask me personally, you ask 1 year, I would break it up into 2 parts. Next 3 to 6 months, I would be very watchful. I don't think any correction because of India, but I would watch for trouble coming from Western world. So that's the first half of next 1 year. If you ask me second half of next 1 year, I think we would be in extremely bullish kind of circumstances, right? So this is the here and now part of it. how much time you think we have? 10 minutes, okay. So this is the first part, which is that what is happening here and now. This is one thing which I wanted to share with you. The good part is that in this entire period when we underperformed, etc., but if you are investing in India, you're not lost money. Normally, when FIs would sell 15, 20 billion dollars, you would expect the market to actually tank. But the reason why market hasn't fallen is because the good news is that in India, domestic investors' exposure to equity, if you see this blue color, dark blue, so if you look at 2019, share of mutual funds and equities was 8%. Now share of mutual funds and equities has gone to 15%. So Indians are investing in equities and mutual funds. There are 3 reasons for this. The first reason is that there is a dramatic decline in interest rates. I started my career in 1999. At that time, RBI used to issue those, Government of India relief bond. That relief bond was giving 11% tax-free. Today there is nothing called tax-free, and the government is borrowing at 6.5%. So one is a dramatic decline in interest rates. Second is because habits change with generations, right? If I ask my mother that, Mama, what does the word interest rate mean to you? She's more likely to say 8, 9, 10%. If you ask some of the Gujarati guys in Mumbai, कि भाई interest rate मतलब क्या? वो बोलेगा 2% per month in cash, right? आज अगर कोई 20 साल का लड़का या लड़की है, उसको बोलेगा बेटा इंटरेस्ट रेट मतलब क्या? तो बोलेगा 6, क्योंकि एक बैंक है ना इंडिया में, हर जगह पे 4 या 6 ऐसा सब प्लास्टर कर दिया. तो for most people interest rate today is 6. In previous generation interest rate was supposed to be 10. So habits will change with generations. Today if there is a 21-year-old, उसको बोलो बेटा पोस्ट ऑफिस में पैसा रखो 11% मिलेगा, वो नहीं जाएगा, बोलेगा उसका UI UX बहुत खराब है, उधर नहीं जा सकता है, लाइन में नहीं खड़ा रह सकता है, राइट? ऐसा बटन दबाया तो पैसा आना चाहिए. It's not going to happen, right? So 3 reasons why people are investing more. One is dramatic decline in interest rates. Second is digitization. And third is, of course, because the generation changes, then the habits also change, right? So this is kind of irreversible. And don't believe, when people say market is going up because all these guys are greenhorns, novices are coming in the market, they don't know what the hell, that's why market is going up. Please don't believe all that. हर जनरेशन को लगता है उसके आने वाला जनरेशन में सब ढक्कन है. ऐसा होता नहीं है. That's not how the world works. The reality of the world is that each generation is much smarter. People who are young today, I have no doubt they are much smarter than me. If I start thinking that they will behave the way I behaved in 1999, I'll be way off the mark, completely wrong. Because people who are young today are better educated. They have better risk appetite. आज आप you meet any 20-25-year-old, उनका फोन में अभिषेक साहब है यहाँ पे, अमित जी है, ये लोग बहुत लोगों को एडवाइस करते हैं, स्टॉक मार्केट में इन्वॉल्व. इनको पता है आजकल आप एनी किड यू सी देयर फोन, उसका फोन में जीरोधा, ग्रो, ट्रेंड लाइन, screener.in सब कुछ है, उसको सब मालूम है, राइट? ऑल द किड्स टुडे आर मच स्मार्टर देन अस, एंड दे आर इन्वेस्टिंग बिकॉज देयर रिस्क प्रोफाइल इज वेरी डिफरेंट. What was my risk profile in 1999 cannot be the risk profile of somebody who's 20 years old today. How can it be? They are not me. They are my son or my daughter or your nieces and nephews, right? They are not the same as your nieces and nephews are not the same as you. So this is not going to change. There will be few years. In 1980, US government allowed 401k investment, where everybody started investing. In India, that 401k moment came in 2015, where government made it mandatory for even pension funds to put money into stock markets. Correct? So don't believe all this which says that all these young people are coming, they don't know, if market fall they will run away. Nobody is running away. The young people have much better education, much better knowledge, much better information. Their risk appetite is not your risk appetite. So don't judge them how you experienced your friends 30 years back. Don't judge them that way. Correct? If you see, I can prove it with data. The data is quite staggering. You know what it shows? Indian stock market, if you follow technical or some statistics, India stock market beta is going down. It means that when जितना दुनिया के stock market का volatility है ना, India के stock market का volatility literally उससे आधा की तरफ जा रहा है. Meaning if the world stock market falls 10%, India might fall 5%. And if the world stock market doesn't perform, India still might perform. This is, don't go, see, you should take it with a pinch of salt कि भाई तुम 25 साल से इंडिया का स्टॉक मार्केट में तुम तो यही बोलेगा. Absolutely right. Absolutely right. Maturity and durability or, inelasticity of flows. Generally, flows should be elastic to market performance. But sometimes what has happened because of the profile of what you said, the flow become inelastic to market performance. That is the key point. So actually, India's risk as a market has started to go down. And now, why I said that I have come from India, so you will take it with pinch of salt. I'm not giving you view on the market. I'm telling you actual statistics. The statistics show that our beta has gone down. And when beta goes down, it means that the market performance, the performance of that market is less susceptible to external vagaries, and it is more durable and more bankable, that type of thing. Absolutely. Yes, all of that provides inelasticity to the flows versus the market. And you can actually see other data. Correlation of returns between India and rest of the world. See where it was here and see where it is in the recent times. Our correlation with the rest of the world is going down. Correlation of returns between India and US. See how much it had fallen. Again, in the recent times, the correlation with China has gone up a little bit. Correlation with US is actually coming down. See these early periods. It was almost like a tandem movement. And see in the recent times, the correlation is practically, meaning it shows in certain periods, the correlation with China is zero. No correlation, right? So that actually tells you that a lot of times, see, because I'm conscious that you all are global investors. Sitting here, you can invest in any part of the world. And for investing and for good planning, you need uncorrelated assets. If all your investments are going to move in correlation, not good. Diversification demands uncorrelated behavior, right? So these are few, the last part which I want to share with you is, I have spoken all about the here and now of the market. Last 5 minutes, just want to touch upon that the long-term case has actually not changed at all, correct? Why I said long-term case has not changed at all? The reason is there are, in quick summary, there are 4 things you should keep in mind. First thing is that we are moving from about 4 trillion to about 7-8 trillion in the next few years. Okay? And when we speak big numbers like GDP, that's obviously macro. But at a real micro level, what counts is GDP per capita. Right? And what has happened is in last 15 years, like, a lot of you may have left India 15, 20 years back. I always tell people that the best way to figure how a country has changed or how society or how people have changed is to see the advertisements. In last 15 to 20 years, India has gone from being a poor country to a lower middle class country. From being a poor country to a lower middle class country, how much has changed, you cannot sit and imagine, but I can give you an example. When you were in India, say 20 years back, if there was an advertisement for dental products, what type of advertisement came on TV? Dental products, like, toothpaste, tooth powder, toothbrush. तो मैं आपको याद दिलाता हूँ because there's lack of time. There was an ad which says, अरे राजू, तुम्हारे दांत तो मोतियों जैसे चमक रहे हैं. ये prime time TV का ad है. I'm a Mumbaiite. I would have seen only prime time. मेरे को नहीं पता रहेगा. But even in prime time, दूरदर्शन it used to say, तुम्हारे दांत मोतियों जैसे चमक रहे हैं. वो बोलता था कि क्यों ना हो, क्योंकि मैं डाबर का लाल दंत मंजन इस्तेमाल करता हूँ. So 20 years back, what was TV telling on prime time? It was saying कि भाई दातून और कोयला मत इस्तेमाल करो, कम से कम दंत मंजन तो इस्तेमाल करो. Has anybody seen the latest advertisement of Colgate coming on prime time? Latest ad of Colgate. It says if you had dessert for dinner, brush twice. What does that tell you about how much things have changed? It tells you how much the population has traveled. And mathematically, this is not storytelling, mathematically, per capita income, when per capita income is $1,000, the notion is that when our per capita income was $1,000, roti kapda makan would be $900. So if your per capita is $1,000, disposable income, money available to save, invest and consume would be barely $100. But the way the math works is that when per capita income goes from 1,000 to say 2,800 or 2,700, The roti kapda makan doesn't go from 900 to 2600. It will rise at the rate of inflation or whatever you're experiencing. So when per capita income goes from 1000 to 2700, disposable income goes from 100 to more like 7 or 800. And when people have more disposable income, their priority is three things: to look better, to live better, and to plan for the future. देखिए जिसका जब $1000 पर कैपिटा इनकम होता है ना, उसके लाइफ में कोई इंश्योरेबल इंटरेस्ट नहीं होता है. But if your per capita, and see, by the way, when per capita income becomes 2800 na, see, this is the latest, see how India is broken up. When you are talking of society 140 crore, when you're talking of general election, when you're talking about India at large, it is 140 crore. But when you're talking about investing, unfortunately, when you're talking about investments, you're not talking about 140 crore people. This is how it has been broken up, right? There was a recent research by Bernstein. What it has broken up? Top 5% of India is $12,000 per capita income. It is as much as China, proper middle class country, very westernized. Then that is 7 crore people. Okay, 7 crore people, top 5% is $12,000 per capita income. Then there is another 5%, which is 7 crore, uska per capita income $6,000 hai, which is like South Africa, Brazil, etc. Then there is 42 crore people whose per capita income is 3,300, like some South Asian country like Vietnam, etc. And then unfortunately there is the balance, which is where obviously the government's social programs and all are very, very important. We should take care of that, there is no doubt, right? But this is how, but see what happens is that you will say 140 crore lower middle class country. But boss, there are 7, meaning in UK there are 6 crore people. In India there are 7 crore people whose per capita is more than, in India there are 6 crore mutual fund investors. In UK there are 6 crore people. You understood? That's the difference, correct? So the long picture is that we have gone from lower middle class to middle class. The real game starts when a country goes to middle class. You all have played these video games, like when we were kids, we played this Prince and all. You know, when you play a video game, there's this prince who is, वो game का नाम भूल गया मैं. I don't know, वो अलग-अलग level पार करता है ना. So what is the game that when the prince crosses different levels, the game becomes faster and tougher, but some new tools and weapons are enabled. And when new tools and weapons are enabled and new levels are crossed, then the prince also becomes more capable to fight, but the game also becomes faster. So I'm not here to talk about video game, but this per capita income business is exactly like that. When a country is, you know, when a country is $6,000 per capita income, that is when actually automobile as a sector opens up. When it is $8,000-9,000 per capita income, then actually tourism opens up, right? So what happens is that you see in India, mutual funds have been there for 35 years. Why is it that all asset management companies, wealth companies, broking companies, सबका listing पिछले 5 साल में क्यों हुआ? Because they've been there for 35 years. They came off scale in the last, they became scale and immensely profitable only in the last 5 years. Why all insurance companies got listed in last 7-8 years? Diagnostics, hospitals, apparels, footwear, beauty products, restaurants. Why everything is coming to the market only in the last 5-7 years? Because they've come off scale only in the last 5-7 years. Because the number of people in the upper end of the pyramid, you know, people climb from below. So the number of people in the upper end of the pyramid is keeping on growing. That is why certain businesses are coming off scale. And in every country's history, there is a period of 20-30 years when people actually, see, because all of this is linked to working age population. Most people in India are born in 90s or early 2000s. So most people in India till last 10-15 years back were kids. Now most people in India are actually coming into their working age, right? So in every country's history, there is a period of 20-30 years when they are at their productive best. And that is when the world wants to sell to them, work with them. So the short term is very attractive, but the long picture has not changed at all. Now parting thoughts. I told you that, I'll skip some of these things, just parting thoughts, 3-4 things, coming back to where I started. I told you that in last 32 years, India's market has compounded 14%. Okay? But you know what is the difficulty? The difficulty is that every year from the high point, market falls 10, 15, 20% once. So imagine you have to drive from Mumbai to Delhi. If you drive सीधा ना, तो पहुंच जाएगा 1100 किलोमीटर है. But what if you are told, every time you drive 100 kilometers, come back 50 kilometers, restart. तो कितना time लगेगा? Double से ज़्यादा लगेगा. Something like that. So what happens, why the stock market makes life difficult for people? In 32 years, it has compounded 14%. But on average, every year from the high point, it falls 10-15%. And सबका पैसा निफ्टी में नहीं है. You see small cap index. Oh, sorry, there are two parts. I just explained. For every year, there is a blue bar and a green bar. The blue bar tells you how much the market fell from the highest point to the lowest point. And the green bar tells you forget high point, low point. From 1st Jan to 31st December, where did the market actually end? So if you take Nifty, on an average every year, there is a 10-15% pullback. If you take mid cap, on average every year, there is a 15 to 20% decline. If you take small cap, on average every year 20-25% गिरता है. उसमें कोई नया बात नहीं है. Okay? So while in the long term market rewards people with double digit compounding, the problem is that हर साल बीच में double digit एक बार गिरता है. तो ample scope for greed and fear to, क्योंकि ऊपर होता है तो सबको लगता है अपुनिज भगवान है. नीचे जाएगा तो सबको लगेगा ये सब चोर है, इधर सब गेमिंग होता है. बिकॉज खुद को तो कोई ब्लेम करेगा नहीं. कैसे मतलब अदर्स का बात कर रहा है ना, अपना बात थोड़ी कर रहा है. करेक्ट? सो दिस इज व्हाट एक्चुअली मेक्स लाइफ डिफिकल्ट. सो देयर आर फ्यू थिंग्स यू शुड कीप इन माइंड. There are few things, like Jeff Bezos said that instead of focusing on what will change, please focus what will not change. So I have also taken that very seriously. So I always tell investors there are few things which will never change. What will never change? साल में एक बार मार्केट 15-20-25% गिरेगा. गिर के फिर उठेगा. जब गिरेगा तो लोग कैसा बर्ताव करेंगे, जब उठेगा तो लोग कैसा बर्ताव करेंगे, ये सब फिक्स्ड है. All this is sure, predictable. What is not predictable? किस कारण से गिरेगा? That is not predictable. See, if you are speaking here in October, November 25, then the topic would be Mr. Trump, tariffs, geopolitics. But instead of 2025, if we were invited in 2024, the topic would be coalition politics. Instead of 2024, if you are invited in 2023, it could be West Asia. If it was early 2023, we would tell you how Silicon Valley Bank can become Lehman crisis. If it was 2022, we would discuss why oil price is $129. If it was beginning of 2022, we would discuss how Russia attacking Ukraine can become Third World War. So क्या fixed है? 3-4 चीज पक्का है. साल में एक बार मार्केट, हर साल एक बार 15-20% गिरता है. गिर के उठता है. जब गिरता है तो लोग कैसा महसूस करते हैं, जब उठता है तो लोग कैसा महसूस करते हैं, ये सब पक्का है. क्या चीज पक्का नहीं है? अगले बार कौन से टॉपिक पे पीएचडी करने का वो पक्का नहीं है. बाकी सब पक्का है. राइट? सो यू फोकस ऑन व्हाट विल नॉट चेंज, डोंट फोकस ऑन व्हाट विल कीप ऑन changing. Thank you very much for listening me out. Wish you all the best. Thank you. Thank you.
Thank you, Mr. Aashish, for sharing your valuable knowledge and insights. Your guidance on investment in Indian equities will help us to make informed decisions and approach long-term investing with confidence. Thank you so much. Next, our third distinguished speaker, Mr. Phanindra Kumar Chinda, brings with him vast experience and deep understanding of investment trends in the Indian economy. May I request CA Abhishek R. Vaishya to kindly escort Mr. Chinda to the stage.
Meet Mr. Phanindra Kumar Chinda, fondly known as CHP. He is a gold University with over 35 years of rich experience in retail finance and rural lending. CHP has led key roles in top Indian companies like Bajaj Auto, Bajaj Finance, Escorts and Texmo. Building on this foundation, CHP founded Upscall Investments Private Limited, where he is Managing Director. In just 3 years, Upscall has become a trusted advisory firm, managing over 350 crore rupees in assets, with a client portfolio surpassing 1,000 crores. Under his leadership, the firm focuses on systematic investing, disciplined wealth planning, and client-centric advice. CHP is a trusted mentor and visionary, known for simplifying finance to empower families in achieving financial freedom. Please join us in welcoming Mr. Phanendra Kumar Chinta, CHP.
Good evening. Good evening, everybody. I think it's very difficult to keep the attention continued after two powerful speakers has completed. Okay. Now I'll try to keep it. Now thanks to Aashish ji, because he said that in short term it's only emotions, in long term it's maths. So, and second thing is that he was talking of global, that is Indian country level, and we speaking about a family level. That was North Pole. Now I'll be taking you to South Pole. Okay. So it's more of a understanding that how retirement planning. It more we are giving examples, our experiences with almost hundreds of clients, where like Desai was saying that 40% of our clientele are CAs and CFOs. So this is just our discussion, not a advice. It's just a general tendencies and compilation of our experiences with the CA community and retired NRIs. Yeah. Today my topic is that how do we plan for retirement? Okay. Now I'm taking an example of their families which are around 50 years of age and how their experiences, what are steps to be taken for retirement, because we are talking of a long-term investments here, not the short-term. So here I've taken this from the Desai's slam that never depend on a single income, make an investment to create a second one. Okay, now we'll be seeing the 3 phases of retirement, how the planning is being done. So what are all the factors affecting the corpus building? And as a CA community, most of us know that what are the factors will affect our corpus building. But I'll be telling you that what actually absolute terms, what is the meaning, it impacts us. Like the Desai ji was saying is that though he's from the CA community, he is not planned for the personal finances. So how the factors will affect us in our personal lives. Okay, and there I'll take you a few steps that how the financial planning is being done. And equity and asset allocation I'll not be touching much because last 2 speakers have spoken more on that. But I'll be speaking that what are the real terms, how it affect us personally at the family level on this equity investments and asset allocation. And how we are giving a value to our clients. That with few examples I'll be able to really take you through. Now, what you have to see is that this presentation will take you, this becomes a perfect recipe from savings to investment and from investment to wealth creation. This is a family of 50 years old, okay, and that is what the group I'm addressing here, okay, and their incomes are around 5 to 10 lakhs per annum, and they're spending around 4 to 5 lakhs per month, and surplus available is 4 to 5 lakhs. That's one example I've taken. It varies from person to person, but just to give some idea that how did it start about, I'm giving this example. And if you see that, they're perfectly party about every weekends, and they go for domestic vacations, and they go for international vacations. Okay, similarly they got 1 to CR in the bank, and 3 to 4 CR in the FD. What we are seeing is that 70 to 80% of our NRIs in the Gulf region are into FDs. That's the reason I have taken this example. and they got their goals of their wedding and education of the children. And if you see here, he is 50 years and wife is 48 years, and they got 2 children, 15 to 20 years. And if you see here, they require around 4.5 lakhs per annum as a retirement benefit. And if you see here, he wants to retire at 60, which is 10 years from now. This just will understand that how the corpus building time is available, how to build about it. His retirement, then relocating, because most of the girl people, they'll relocate back to India. They cannot get the citizenship here. So his relocation has got 10 years from now. And life expectancy of these couple we are taking 18 to 85 years, which requires almost under 25 years of pension. Now these are the 3 phases of the retirement. Normally if we see that, once we start about the investment, then people will say that when to start it. And this is what he says that, okay, I started investing at the age of 14, then I felt that I lost 14 years. That means immediately you have to start off. That's what. With this, his direction, his idea, we'll be going for these 3 phases of retirement. First phase will be planning and corpus building. Second phase will be testing, organizing, and financial decisions of the plans, which is in the range of plus or minus of 2 years of retirement. And third phase will be relocating to India and implementing the plans. What are the steps which we taken, what we have to really start thinking in each phase? This is the first phase. Now let us take that this is what now if you see here, what are all the factors affecting to build the corpus in these next 10 years? So we all know that inflation, tax planning, all these things will be known as a CA community, but we'll understand that in the next slides that how much quantitatively, absolutely it will get effect on our planning. Now if you see that, this is where the stage, that comprehensive review of your portfolio is required. We have seen that lot of NRIs invest into illiquid assets of real estate, okay? And there are multiple complications of the real estate which might have happened. There, as Desai was saying is that there might be mis-selling of the different people, might be you have got accumulated into lots of huge ULIP plans. I have seen that one client in Dubai that he had almost the ULIP plan, entire ULIP plan, he has planned for entire retirement. Almost he has gone to 7 crores of investment into ULIP plans. You can see that how much, even he is one of the topmost employee of a company. So this is where at the stage of 50 and last time for us to really review and take the corrective actions. So this is where the stage, critical stage for all of us that, see, we have to review entire our existing plans. It might be underperforming assets or it might be wrong assets. So this is where it will change entire your financial planning. This is where again, till now you might be having different goals. But prioritizing your goals will become important because there's a limited amount, because whatever the way you accumulated your corpus, it cannot be changed now. With that existing portfolio or corpus, we have to really change for the same. So some goals might not be possible, some goals might be possible. Then how do we really prioritize the goals and all? It's this very, very critical stage for this type. And the other major thing is that at this stage, will writing and trust formation. Will writing, all of you know that if the will is not there, Sharia law will get into effect. And your bank accounts gets freezed on the first day itself when the person dies. So that is very, very critical that we have to understand whether will is written or not. How the estate planning is being done for the next generation. But without will, there will be huge problems for the wealth which you have created, which your next generation cannot use it. So just if I ask that, how many people have written will? Can I just raise the hand? How many people have written the will? It's minuscule. And this is where, might be that around, I have seen that around 6-7 hands up. And this is very, very critical. And there are many examples in our NRI community that the first day after the death of the person, the account was freezed because there was no will. And the wife was literally on the roads because account got freezed. And because of the local laws, and 1/3 will go to only wife, balance all will have problems. And till you get a court order, the amount will not be released. So this very the critical pointers I'm putting to all of you is that in the community which all of us know that these examples are happening, we don't act. And this is where is a critical idea that these are the will writing, okay? How to transfer the estate to the next generation. How, because will is one thing is that whenever you are not there, you are, whatever wish you have, you are making it to run for the lifetime. Right? So for the son, one son you might be want to give him 75%, another son you want to give 25%. But when the will is not there, then you're fighting. But when the will is there, when you are not there, whatever you have written, it will happen. One is that not freezing of assets. Whatever the thing which you are planning now, it will happen after you. So will becomes a very critical, particularly when we are HNIs and NRIs. Like the way Aashish ji was saying is that when the per capita income is low, surplus amount is low, it is enough for our regular needs. But when the wealth is there, so it has to be very properly given to the next generation. It is more so for the US and all, because when the wealth goes to the next generation, 40% it is being taxed at the rate of 40% in US. So that becomes more and more critical in planning of the estate planning for the next generation. So this is the second stage where you are coming to 2 years before the retirement, where, okay. And this is a second very critical stage because we have seen that lot of NRIs, NRE accounts, NRO accounts and IT filing is not being done properly. That is becoming very, very critical. In some of our NRIs also got notices from the IT because reason is that though proper wealth was there, a lot of hurdles they had. And this is where the critical stage where that NRO accounts have to be opened, NRE accounts have to be opened, how the FCNR deposits to be transferred to India, how it has to be planned, tax planning. Example, one of the client we had, and he's from Qatar, he had 7.5 crores in FD. He was going to India. In India, this interest rate, it's taxed at almost the bracket which they are into, that 30%. That too, not like mutual funds. Interest accrued is taken as an income and every year it's being taxed. That's being deducted from your income. So that's a huge tax planning. So then how do we really plan for that transfer of FDs, how it gets matured, how to transfer, how to take it, upgrade it, it becomes a very critical in this stage of plus or minus 60 years of retirement. This under tax planning is that we have seen that one of the good, high tax regimes when compared to your Gulf countries is India. Reason is that all of you are into 30% bracket there. But once properly taxed, and if you invest into proper income, the tax can be as minimum as 0 to 5%. Take it from me, that is what the planning we did for the people who are transferred to India. That we bet you that your tax outflow will be in the range of 0 to 5% if you plan properly for your entire family. And health insurance, this is what the people who are transferring back to India will give a very least importance. Reason is that in the health insurance, okay, first 2 to 3 years, they don't cover which are the existing diseases. So always you have to take 2 to 3 years before shifting to India health plan, which has got a global coverage. These are the things matters a lot once you get into the hurdle. And if you see that, this is what the critical stage that how do we really plan for your retirement? I have seen that a lot of clients will get into consultation. It might be getting into the boards of different companies. And this is what the stage where you have to decide that get started into the skill building. This is actual relocation. This is where we have done a lot of savings for our clients in the previous last 3 years. And if you see here, how to repatriate from the funds, okay? I've seen that a lot of clients immediately going back to India, they'll repatriate all the deposits and thinking that they have to pay the tax of 30%. But what we have seen is that when they are R&R status, the tax implication is not there. It's not taxable. So you have to grade out the all shifting of funds, taking the advantage of dollar appreciation and rupee depreciation. So keep that entire funds flowing next 2 years. Just before the R&R status ends, 1 month before, all the deposits can be really redeemed. That will change entire tax flow. One of the examples which we have seen that with our client of Mumbai, When we calculated, his tax savings was almost 1 crore after the planning. So 1 crore saving after the tax planning. These are all real examples I'm giving you, quoting you. So if you see here, this is what after retirement, where I was talking about the 0 to 5% taxation. Because reason is that up to 12 lakhs, income is not taxed in India. That is very minimum. So if you want to get around 40 lakhs of, like example that you want to get a pension of 25 lakhs per annum. Reason why I'm saying is that 2 lakhs is a very premium expenses which is required to stay in India. So 2 lakhs per annum, per month becomes 25 lakhs. But 25 lakhs, this 50 years old Alok, will require 40 lakhs when he retires actually, because of the inflation. So your planning has to be on 40 lakhs. So how do you really invest that 40 lakhs becomes very critical. Okay, it might be through mutual funds, or it might be through debt funds, it might be through income generating from the real estate commercial properties, annuities. Once you do this properly, all these tax brackets will get you into 5 to 10% of the, 0 to 5% of the taxes. So this, normally the 2 years of window you have, based on, it is not 2 years exactly, it's a 2 filings. It's not 2 exactly full years, it's a 2 filings. So based on that, why this becomes important is that you're moving to India, and from NRS status to RNR becomes a critical. Like if you move into April, you'll get only 1.5 years. If you move into September, October, you'll get 2 years. So these are the critical factors you start thinking on that at the plus or minus 2 stage of 60 years. Now let us see that second factors. These are the general things which all of you know, but next slides will tell you that what's the real impact of it. This is what the inflation. Inflation in India was ranging from 2%, 3% to 14%. But if you see that in 1977, the 1 lakh rupees, its purchasing power has come down to 2,500 rupees now. 1 lakh rupees to 2,500. So what does it imply for us? This is what. Now currently if you want a current life stand, which you want in India, of 2 lakhs per month, which requires 75 lakhs, will cost us 40 lakhs in the first year of retirement. That is 50, Alok is 50 years now. He requires on 60th year, first year, instead of 25 lakhs for the same standard of living, he collects 40 lakhs. But if you see that at 35 years from now, which is last year of his expectancy, he requires, for the same standard living of 25 lakhs, he requires 1 crore 50 lakhs per annum. And have you planned for that? We know that inflation will kill us, factors affecting, but are we knowing this picture? Does it have capacity to, or did we plan for that amount of 1 lakh per annum, 1.5 lakh crores, or 1.5 crores in a year? So, but this is what the factors we take into our retirement planning. This is what the power of compounding. If you see here, the guy who starts SIP for the retirement, which is required around 8 crores of campus. So why we say is that normally, generally, for just thumb rule, which is might vary from person to person, family to family, 20 times your first year pension can be taken as a corpus required. So 40 lakhs which we require, Alok requires 40 lakhs, right? Not 25 lakhs. So 40 lakhs into 20 becomes 8 crores. So these 8 crores would have been done by just an SIP of 15,000 rupees if you have started 30 years back. Okay? If he starts at 20 years before retirement, his SIP requirement will be 50,000 rupees. But now if he has got 10 years, he requires 3 lakh rupees of SIP. All this is calculated at the range of 15%. Again, I'm saying is that we are getting into math because we are talking of long term. Okay. And for the money to compound, they call it as 843 rule. First 8 years, you will get a good returns. And second 4 years, you get exponential returns. After 3 years, you will get super exponential returns. So if you understand that, always for your corpus to give compounding results, exponential returns, you have to plan for 12 to 15 years before to have the effect, feel the effect, build the corpus, build the wealth. You should have a long term. So that's what they said about 843 rule. And if you see here, why I'm giving always this comparison with FD is that 80 to 90% of our clients majorly depend upon the FDs, thinking that it's a riskier asset to get into the equity. But I've seen that, if you see that for the building of 8 crore, building of the pension plan, okay, if you're going for FD route, you require almost 15 crores instead of 8 crores. I was giving 20 times the rule, which is we are saying is that 8 crores. But if you are planning to do entire your financial planning, that means pension to get through FD route, it requires almost 15 crores. Okay? To build that 15 crores, after the building the 15 crores, and if you are continuing with your pension plan through FDs, your corpus balance will be almost 3 crores at the end of your lifespan. But whereas you are planning for smart planning, which you are talking with that in different asset classes, if you put it, you require only 8 crores. But at the end of lifespan, you will be left with 17 crores. See the difference. When we are talking about just FD, how the difference will come in when you are thinking of a strategic plan implementing through different asset classes. Because the tax outflow is almost 28% effectively. And in the strategic, what we are doing is that when we are doing strategic planning, where 30% of the assets are invested into regular income plans, okay, annuity, 30% is invested into real estate and where you can depend upon the rental income, another 30% into mutual funds to give the growth for to beat the inflation, and 10% in the cash. This is what it happens that your tax outflow will be almost 0 to 5%. And the corpus, if you see that, in the FD route, you will get 3 crores of leftover residual corpus, whereas in the smart planning, you will be getting around 17 crores. These are all just our examples. I'm saying is that it will vary, maximum depend upon the family to family, but understand that these are the real figures. Just by changing your planning of your investment from 3 crores of corpus, you will be richer by 17 crores. And second thing is that your building of corpus also, it will start. In the next slide, I'll be showing that how the corpus building also will affect by the method of instrument which you take it. So this is what he says that I've got a plan, retirement plan. And this is the reality of the survey, okay? They say very clearly that almost one of the mutual fund houses has made a survey as old, this is almost as old as, just as new as last year. They made almost 70% of the people still feel that they can depend upon their children. Okay, Bhagwan dekh lega, acha dua hai, aur bach jayenge. Kya hone wala ho jayega. And this is what the real planning. And almost I'm talking about a staggering 68%. And this is a survey done by one of the fund houses. So this is what we say that is simple. But if you see that, he says that first one is wrong, second one is right. But mathematically both are right. So what we have to do is that we have to plan for our finances, okay, fix the goals, okay, keep the money for your future goals, balance, you spend it. That makes a lot of difference. This is a simple stage of 6-stage financial planning we do. In the first stage, income, liabilities and all will be sitting on the paper. And second thing is the long-term and short-term goals we'll be discussing with each family. And then what is the risk profiling of each client, we'll be doing that. In the second stage, we say that based on your goals, what are the plans required, what are the funds required, how the corporate building has to be done. Based on that, equity assets, equity allocation is being done. So I'll be, just in the next slides, I'll be showing that how the equity allocation will affect your entire returns and how you will get a peace of mind, how the risk can be diversified. So, in the FD route, what we are telling you, 14-15 crores is required for the financial planning if you are doing the pension through your FD route. And building of 14 crores requires 7 crores for allowed because he's got only 10 years. But if he has do through mutual funds and equity and asset allocation, he requires only 2.7 crores. That means his requirement of current amount also will change a lot. Almost from the current 3 crores requirement, if he goes by only FD route, he requires 7 crores. Almost he requires 4 crores additional for the retirement planning. Such a huge difference is there if you're not really getting out of this FD mode and use that entire smartly about other instruments available for the investments. This is what I was saying is that in FD route almost your 50 crores will come down to 3 crores after utilizing the pension. Okay? And 8 crores will be enough for the smart planning in the retirement if you are going through other assets allocation investment. And if you see here, how that second point, if you see that, how that entire your pension is being diversified into different asset allocation so that you'll get a peace of mind, one. Second thing, that you will get a very good compounding through mutual funds and other areas. So this was the asset allocation, and here, this, if you see here, and that's what Aashish ji was saying is that different assets will have a different years of returns. And if you see here, first one, okay, in 2007, there was almost 50% of the up in the equity returns in Nifty, whereas in the next year, 50% was drop. And next year it was up by 50%. And if you see the gold, the bull run was there from 2008 to 2011. But from 2012 to 14, it was negative returns. So each asset will have a different phases of your returns. So by having that equal assets, asset allocation, you will have a lot of risk diversification. And there will be a better returns also in the long term. This is what Nifty index, which all of us know that is the safest investment, let us take that. If you do that, 1 crore invested in 2002, it has gone to 20 crore, 22 crores. After so many ups and downs, the way Aashish ji was saying is that every year 10% fall. And sometimes it was 50% is a fall, 20% fall. After so many falls also, when compared to FD, which has given us 5 crores in 20 years, or 22 years, the Nifty has given 15 or 22 crores, almost 4 times the returns. But if you see that, these are all the companies who are existing and will exist in future also. What's the problem in investing in this? So, large companies can be really safely invested. For a long term, again, we are saying is that 14 to 15% compounding India is given for a long time. It is going to come because we are in a cusp of very outburst of economy. This is what already he has explained, that how the Nifty will move. Some of the examples that how different funds are given, almost 10 lakhs initially invested. FD has gone into 40 lakhs in 20 years, whereas same gold has come to 1.7 crores. But if you see that small cap and large cap, it is given almost 2 to 2.5 crores against the FD returns of 40 lakhs. It's a huge difference. That is what is going to happen to be safe in the long term. And this is again SAP of 10,000 each fund. 3 funds were invested, almost 30,000 per month in 15 years. It has generated almost 3 crores. After ups and downs, again I'm saying is that it is not a straight line upward. If you see here, one of our, these are a few examples that how we corrected the existing portfolio. This is name searching. Rajat had almost 2 crores invested. And he used to do fantastic research of mutual funds. Okay, but he was entering, but he was not exiting. So, during a period of almost last 10 years, he has accumulated 43 funds. And his returns, 10.8%, which is less than gold. But when we went to him and we said that, and he was investing into the direct funds. That's what we said, that all of your research is good, your entering is good, exiting is also very important. That is where your emotions will come in. And we have taken the entire portfolio from 42 funds, we brought it down to 10 funds. And if you see that third and fourth bar, if you would have continued with the same investment for almost less than 2 years, his portfolio would have been 10.5 crores. This month, last month we had a review with this, that's the reason I got this slide. And it has come to 11.8 crores. 1.3 crores has increased. And that is what the portfolio, which I was talking, is that review is required. Okay, entire portfolio has to be reviewed regularly with an experts. This is an example that, okay, he has come that he wanted to retire, whether it's possible or not. We calculated, because he was on to FD, he was very conservative client. So he said that we calculated and we said that within 5 years or 6 years your amount will be off. You cannot take the retirement. Then we have calculated and we said that how do we really rechange the investments, and he has to work for 2 more years. Entire his workflow is changed. If you see that entire lifespan, his corpus was enough. These are all real examples from our clients I'm giving. This is what the BMW, okay, last time one client has purchased with 75 lakhs, he was having a cash. So he talked to us. He said, okay, this is a good time, okay, now let us take a chance. He was having an idea of mutual funds and all. He was equity. We said that instead of giving this 75 lakhs check to a BMW dealer, you give to MF dealer, MF mutual funds. And he has invested into 5 mutual funds. He's already paid 42 installments. What we have done is that he invested into 5 funds. And if these 5 funds, after paying of almost 42 installment, which is 60 lakhs, his current fund value is 60 lakhs. And current loan balance is 25 lakhs. Even today, he, pays back the entire loan, his net balance will be 35 lakhs. Just because he was knowing the mutual funds, he was exposed to mutual funds, he has 2 crores of mutual fund exposure. We said, yeah, we'll take this chance. And he has got the returns of 22% IRR when compared to the 7% IRR HDFC charged for the car loan. And this is what we changed almost. If you see that, 35 lakhs in an almost span of 42 months. So this I'm not going there because of the procrastination time that how mutual funds we select and all. Because normally we select for each client that how do you really funds choose and all. We take 4 axes. What are returns expected? What is the risk appetite? What are the instrumental risk and all 4 axes, and we select the funds to each client. Around 90 funds we select and guide them. So this is what my last slide is, that what the wise do in the beginning, fools do at the end. We are all wise people. Tomorrow itself will start our retirement planning, and we are here to help you out, and we are here up to 24th, and individual appointments we'll be taking and we'll be getting in touch with you. Whoever wants to really get in touch with us and discuss with us, we are here to welcome you and help you out. Thank you.
Hi friends, my name is Raju. I've been in Middle East for more than 2 decades, and all my investments were in fixed deposits and mutual funds, and that was managed by multinational bank. Now, I was not happy with them. I just wanted to get out because they were not providing assistance, and monthly one statement used to come. That's about it. So then I realized something. I'm very good at managing the finances of others, not mine. So what I did a course of mutual funds, stock markets. But still, is it complete? No. I did not have the confidence to go to take the next step. That's when I got in touch with the seminar being held by upscaling. And since I know Amit Desai, the person very well, so that's how I got in touch with them. And initially I was a little skeptical. Then I said, they looked at the portfolio and they told me, Amit told me that I would have that in 3 years' time. Wow, that's great. 33%, not bad. So I invested a small amount, and based on the returns which they were giving, I slowly increased it to about 50%, and then 90% of the investments I was making it through upscale. Well, it was not a honeymoon period all the while. There were some nervous moments too. He advised me to invest in a private fund. I invested in that. And then I also made my wife invest in that. Now you know that's where the journey starts. So the return was not mine. Then he said, don't worry, Raju, just be patient. Now today, the same fund is giving a 45% increase. And what is the result? Oh, my investments have gone up by 50% within a year's time. My family, my wife, and my 2 kids, all the investments are being managed by upscale. Now, what is the advantage of dealing with upscale? Based on my experience, I can say that they give us sound advice, and 24/7 is there available for you, and the ability to connect with each one of you on an individual basis. So the question I have for all of you is, what are you waiting for? Just do it.
Hi, good evening. My name is Edwin Budello. I've friends. My name is Nirlep. I'm based out of Doha, Qatar, and I just shared my feedback and experience about upscale investment private limited. I myself a chartered accountant and NRI for some 15 years. Most of the time I have seen that we have very limited time when we visit India. We are always being advised by the guide. I myself had experience before I started investing with upscales and now in a goal-based manner and in a profitable manner. What I've seen about upscale is that they have enormous experience into the market. Their methodology is quite goal-based, well-researched. Their service is excellent. It is also another problem which we NRIs always face. They are always accessible and available from my experience. So I wish the whole upscale team, Mr. C. Kumar, Mr. Amit Shah, Mr. Yamit Desai, very all the best in their endeavor. And I would all request you to have a look at their investment methodology, which is purely goal-based and with right of supervision into this unit. So I wish you all a very profitable and rewarding investment.
Thank you, Mr. Panindra Kumar Shinde, for your thoughtful presentation. Your guidance on investment on retirement plans, tax planning will definitely help us to take wise decisions about the future. Now, the floor is open for any question answers. We kindly request the audience to raise their hands if they have any questions.
Thank you, gentlemen, for your fantastic presentation and eye-opening things. I have one question. Yes, as an NRI in Oman, we are safe to do investment in shares and mutual funds. But I have my daughters who are based in Canada and in US, and I understand they have the citizenship and green card, so they are not allowed to invest in Indian stock market or in mutual funds. Can you please advise them for what they should do?
So is this, you're saying from NRE account kind of thing or dollars or how? That might be because of PFIC, yeah, it might be because of that PFIC taxation. It might be because of, because what happens is that in the US, if you invest in, let's say for example, if you're investing in an Indian mutual fund, an Indian mutual fund is a tax sheltered vehicle. So if you're investing in a tax sheltered vehicle, meaning that in India, if you're not paying tax, then even on the notional gains, in the US it is getting taxed. But from there, they can invest in certain types of vehicles. For example, we do AIFs. Some fund houses, they do AIFs. AIFs are not tax sheltered. So what we do is that Americans, we take money in an AIF and then we file a K1, we issue them a K1 statement, which tells them about what taxes have been paid in India. So if they do a PMS or if they do an AIF, they are not tax sheltered vehicles in India. So that doesn't get taxed in US. But a mutual fund, which is a tax sheltered vehicle in India, that gets taxed. So there is you have to identify the right, investing in India is possible, you have to identify the right way to do it, whether it's a PMS or a AIF, that might work better. It's possible to do it, you just have to identify the right format. Yes. For example, that's why instead of NRE account, if they're investing straight away in dollars, there are offshore funds. Like for example, typically global investors invest through these global funds like a UCITS, right? It's like a Dublin UCITS or a Luxembourg UCITS. They are global fund jurisdictions. So sitting out of US or Canada, some of those investors also invest in these global funds. Like we ourselves, White Oak actually is one of the largest FIs investing into India. So we ourselves raise money all over the world through these UCITS vehicles and deploy it into Indian markets, also deploy it into other emerging markets. So those funds are also available.
What kind of return you expect?
No, the return is linked to the Indian market. If it is investing in India, it's directly investing in the Indian stock market. So whatever is the long-term return in Indian equities, it's like a mutual fund investing in Indian funds.
But they will be, whatever the tax is there, that will be paid there.
Yes, absolutely.
I have a question. For us, investments via gift is better, and how do we structure it?
So for NRIs, yes. See, typically what has been understood is that if you invest through an NRE account in India, then you know that you have to file tax in India, and then there is TDS and all those things. Gift City is through and through clean, because what happens is that, I mean, on your question, even we all have, like, we do Gift City funds. So what will happen is that if an NRI invests in Gift City, and the Gift City fund then invests in a domestic mutual fund, so when the Gift City fund redeems, it is tax-free. So, like, if you put money in a Gift City fund, which puts money into our fund back home, right? Back home in the fund, there's no tax. When you withdraw from that in Gift City also, there is no tax. So basic point is that Gift City is more tax efficient as compared to your NRE accounts. That's the point. Doesn't apply. No, I don't think that from NRE account you can't invest in Gift City. You will have to invest from outside only.
But in mutual fund also you have a liberty to take back the capital gain, through providing the TRC and the Form 10F. So when you file the return, if you are providing TRC in 10F, then you will get your capital gain back, capital gain tax back. Double taxation. We have a double taxation agreement with one government. So you can get your capital gain back.
Nut to nut, what Shelley says that you can claim back whatever tax you are paying just by seeing a TRC certificate, because there's a double taxation avoidance treaty between India and Oman. Okay, all the tax can be claimed. Like this year, almost 2 crore rupees were returned by the IT department for our clients.
For the upscale, I just wanted to understand the Sharia law. What I have heard is now in Dubai, the Hindu law is acceptable. So how is the status now on that? So Sharia law is not applicable. Now the Hindu law is applicable in Dubai.
This is in case of a will, or?
In case of a will.
I think we have to double check. We are not sure on that.
And one question to Aashish ji. Aashish ji, you were saying that when everybody gets greedy, we should be fearful, and the other way around. So now gold, what is everybody is greedy about it. What do you say?
So, thanks for asking that, because when I was there, I should have clarified one thing. See, when somebody says be greedy when others are fearful and be fearful when others are greedy, what happens is that you might end up reading it as extreme situations like greed and fear. The market, and hence your own response to the market. The market is not always at extremes. Sometimes, you give example like March 2020 and then October 2021. Why you give extreme examples? To make the point, to drive home a particular learning, right? But in real life, you spend very less time at extremes. You spend a lot of time somewhere in the middle. So greediness and fearfulness should be calibrated. That's just one clarification I want to give you.
Yeah, but currently
you're not always buying or selling something. You are calibrating, right? Like, for example, if you have X amount in debt, X amount in equity, and another amount in gold, you are calibrating, meaning changing your allocations amongst all. You're never making anything 0 or 100. That's what I want to clarify. Now, coming to gold, first clarification is that I was strictly talking about gold as an investment. So I don't know how many people own gold as an investment, really. I think practically as an investment, it must be 0 in people's portfolios.
I think it has become a tool now. Now people are recognizing it as an asset class, which was not there earlier.
Yeah, so recently so I'll answer your question first and then I'll tell you a joke. Recently somebody asked me this. So I write in this, in India there's a magazine called Value Research, which covers mutual fund industry. I write in it every month, twice. So in that, I wrote an article about this. See, the thing is like this. Till the time people are concerned about US economy, this whole US stock market, geopolitics, tariffs, till the time people are concerned about those things, gold and silver will be in the headline. मतलब सुर्खियों में रहेगा आपको, you'll keep hearing about it. But the big movement is already done. Right? So if you see, let us say tomorrow there is some news that US economy is tanking, the stock market is declining, you will suddenly see another uptick in gold and silver. But that's...
But what about the central bank buying? So do you think the central banks will continue buying? I think the more of it is coming from the central bank buying rather than the global geopolitical situation.
So the thing is, see, it's not like central banks are going to buy forever and ever and ever, right? Central bank's holding of US treasuries has already declined dramatically compared to what it was 5-7 years back. From there, it's been a massive decline, correct? Central banks may also start diversifying across other currencies. Central banks are also, like certain countries, including India, is also stocking oil, for example, right? So central banks and governments will do multiple things. I don't think you can bank on that. And by the way, let me tell you, when each and every person starts to talk about central banks buying gold, what does it tell you? Like, it's not you meaning, it's literally there, right? Yes. So, and somebody told me, आप तो central bank का बात कर रहे हो. I was talking to somebody, I said, gold का major movement हो गया है, right? Gold लेना चाहिए था 2 साल पहले, अभी क्या? तो मेरे को बोलता है कि नहीं आशीष जी, शास्त्रों में भी लिखा है गोल्ड लेना चाहिए. मैं बोला भाई वो हजारों सालों से लिखा है, कल थोड़ी लिखा है, तुमने आज पढ़ा. Right? So I don't. So what happens is when people have decided, when people have decided, they'll give you any why central bank. They will say शास्त्रों में लिखा है, खरीद लो. But I think the major movement is already.
Yeah. Thank you so much.
Oh, I must add, you
Any further
presented.
questions? I suggest we can take offline.
No, there's no question. I'm just trying to say that you did a great job. You really didn't need the charts. You kept everybody interested, engaged.
अरे इनको mic दो sir, mic दो. No, thank you very much. Thank you.
Retirement options, somebody you mentioned spirituality and astrology. So that was also very interesting to know.
These are all real life examples. I've seen that most of our clients have completed 3 years degree in astrology. I'm talking about your own examples of Qatar and all. Art of living. The huge it is coming in. And in Bahrain, we got a separate program for the art of living. 200 people attended. Most successful was through art of living. So what I'm saying is that it's a huge, once the people get into the different levels of achievements, okay, they tend to do these kind of things.
I think on retirement, I just want to say that it's not for retired people. Keep that in mind. Retirement planning is not for retired people. Most people have this wrong.
Thank you, speakers, for addressing the queries. Now we will move on to the felicitation ceremony. In between, a kind reminder, those who have not signed attendance, kindly request all to coordinate with Ajil on the side. And also I request anyone who has not dropped the visiting cards, kindly request all to drop the visiting cards for the raffle draw.
सर मेरा निकालना, सर मेरा निकालना.
It says Mr. Unmesh, but I think we should give it to Ms. Alina.
Alina is the... Next time, who wants to be the MC? अभिषेक चंद्रशेखर. आशिक टीके. आशिक. How many are there? Can I take mine?
Please, go ahead.
उदय सर, उदय धनानी. Oh, and the winner is Sangeeta Suresh.
This is insider's trading.
Shalini.
Congratulations to all the winners. Now we kindly request all the speakers, chairman and vice chairman onto the stage for the felicitation ceremony.
Good evening, everyone. Request you all to kindly be seated. I won't take long. Just few minutes. Please bear with me. I know that delicious dinner is awaiting, but still, just give me few minutes. It is my privilege to deliver the vote of thanks for this session, why investing in India now is best bet compared to other markets in the world. Thank you, Chairman CA Unmesh Bhome, to give an overview of WOFA 2.0, which is happening in Greater Noida. It's happening from 31 Jan to 2nd February. It is a very mega event where many of the professionals come down from all across the globe, and is a great platform for knowledge sharing, as well as, no doubt, it helps in networking and building relationships. So please do take the advantage of early bird discount and get in touch with any of the managing committee members. First and foremost, a big thanks to the Upscale Investment Private Limited team for coming down and for this enriching CPE session. Especially to CA Amit Desai, founder and director of Upscale Investment Private Limited, where he brought out the fact that career is shrinking because of AI. A big thanks to Mr. Aashish Somaiyaa, ex-director and CEO, White Oak Capital Asset Management, where Sir had rightly said that though human beings are rational and logical, but they are emotional and psychological. And the way it has been brought out in the stock exchange behaviors, and it is really very good to see that in the short term, it is the emotions, but in the long term, it's more of the maths and statistics which work, and the way you brought out all of that examples through the charts is commendable. Thank you, sir. And one more thing which sir has said is when per capita increases, it is a way how we live, how we wear, or what we wear, and also financial planning. And that is where a big thanks goes out to Mr. Phanindra Chinta, founder and managing director of Upscale Investment Private Limited, where sir brought out the phases of retirement planning and relocation. Thank you so much for emphasizing the importance of health insurance, the importance of will writing, and many more tips. Our gratitude is extended to CBFS, College of Banking and Financial Studies, who is our sponsors, for the ever-supporting assistance which is given to our chapter. Heartfelt gratitude to the logistic management, photographer, videographer, technology, and Intercity Hotel for providing us this beautiful venue, and all the people who were working tirelessly behind the scene to make this event seamlessly happen. And more importantly, all of you all who have come down in large numbers, and thank you for being active and engaging participation. So this, I would say, emphasizes or brings out, in words of CA Amit ji, managing money is more important than making money. So thank you once again, everyone, and enjoy the dinner.